truth be told, Charlene, I think it's impossible to own a home in this country. That it's expensive. I think iko na wenyewe hii kitu.
Oh, and truth be told, Mali,
Uh-huh.
it may feel impossible, but in this same Kenya, it's possible to own a home at nearly the same rate as your rent. And on today's episode of the TBT podcast, we are joined by a brilliant female entrepreneur within the real estate space, the co-founder of RentScore Africa, Christabel Ojuok. Christabel, please meet our audience and introduce yourself.
Thank you so much for having me, Charlene
Yes.
and Mali. My name is Christabel Ojuok, co-founder of RentScore Africa. And so primarily at RentScore, just like you mentioned, we are helping as many Kenyans as possible to be able to own their first homes affordably at almost the same rate as their monthly rent. Yes.
So how is that possible, really? Like, Mali, have you had?
Uh-huh.
Because I'm renting. Are you? What is it at this point? Because really, I think then this will be sort of like a life-changing episode, because after this,
Yeah.
we need Christabel then to hook us up,
Yeah.
right? You started out by saying it almost feels like an impossible.
Yeah, it's a mission impossible for many Kenyans.
Yes.
Yeah.
But Christabel is here to what? To debunk that as a myth.
Yes, awesome. So I'll start with a little bit of my background.
Yes.
So my professional career has been in real estate for the last 14 years. So I know that's a long time, right?
Yes.
So real estate is what I also studied for when I was in university. So both for my undergrad, I did Bachelor of Land Economics. And then I proceeded and did my postgrad. So that was in real estate finance and investment. Yes. So both in academia and practice is real estate.
Yes.
Yeah. So I feel very comfortable as
Yes.
far as that subject area is concerned.
Yes.
Yes. And so at the core of what we do at RentScore, so we discovered that just like you guys, it's not the norm for people to be able to own homes, especially in this country. For the longest time, it's been sort of like a far-fetched dream for other people. It's not for, like the typical person, a young professional. This is something that is left far out in the future. So what we decided is we partnered with, I don't know if you guys know about Kenya Mortgage Refinance Company. Yes. So this
Kenya Mortgage.
refinance company.
Is this government or it's?
Yes.
It's government. Okay.
Yes,
Okay.
yes. So around 2020, they, and in line with the affordable housing agenda,
Yes.
Yes.
as part of the Big Four.
Yes.
From
yes,
the
yes.
previous regime,
Yes, the
as
Big
well
Four
as the
agenda.
current regime. So KMRC was institutionalized so that many people, yourself and I, are able to access finance at lower interest rates. So you're looking at single digits.
Oof.
Now, single digit is unheard of
Yeah.
Yes.
in
Yeah.
this economy.
Yeah.
So you're looking at, on average, 9.5% per annum. And that's it's a fixed interest rate on reducing balance.
Fixed?
Fixed
Did you just say fixed? Because I think you need to repeat that.
fixed interest rate, and it's on reducing balance.
Yes.
Oh.
So what happens is now KMRC has partner members.
Yes.
So these are like now our primary mortgage lenders, so the banks. So we work with a couple of them who are now shareholders of KMRC. So in order to be able to now, so they're the ones who lend this financing to now you and I at those affordable rates. Why? Because if you're keen on buying a property, I mean, there has to be the property, then there has to be the financing.
Yes.
Because if you're thinking of, I'm just going to save, maybe wait for so many years, it's going to take you maybe 15, 20 years.
Yes.
By the time you get to maybe that 8 million or 10 million.
Yes.
Yes.
So it's sort of like the reverse. So we'll give you this financing,
Yes.
affordable rates,
Yes.
then you can start paying pole pole. And if you now look at what your repayments are, it's typically what would match if you're living in that house as your rent.
Ah.
Yes.
But honestly, Christabel, you talked of a single digit interest on your mortgage, right?
yes.
Are you saying, because last year we saw interest rates really skyrocket in the country. We saw people who had mortgages. I know of someone, an acquaintance
Okay.
who was on a dollar-denominated mortgage. And when the rates went up, it got to a point where they could no longer keep up with their payments. Are you saying there's finally an avenue for Kenyans to get a mortgage? And 3 years in, 5 years in,
It's
we
still
wouldn't be
the
at
same.
20%.
Inflation.
Yeah.
Yes, exactly. So let me break it down in terms of how it works, because there's certain parameters. So firstly, it's accessible to all Kenyan citizens. So whether you're here in the country or you're in the diaspora, as long as you're a Kenyan citizen, you can access the facility. So that's the first step. Then secondly, in terms of the cap, you're looking at, there's a price cap, because again, remember, it's your first home. So we're not looking at something extravagant. So the cap is 10.5 million Kenya shillings.
Yes.
Then I've talked about the single digit. So you're looking on average at 9.5%. A fixed, meaning, and you can access it up to 25 years.
Okay.
Based on now your retirement age. So it means if you access that facility today,
Yes.
for the next 25 years, if
Yes.
by then you'll not have retired,
Yes.
then that rate remains. So if your payments are 40,000, 50,000, it's 40,000, 50,000
All the
up
way.
to all the way.
Okay.
Yes.
Nice.
Yeah.
Okay. We didn't do this, Charlene. Welcome
Yes.
to the Truth Be Told podcast. My name is Mahalem Toto Mwanza.
And I'm Charlene Kimara. You may call me Mama Bima Kenya.
Very good. And today we are discussing matters housing.
And this topic is hot. I think that's even why we forgot
that was quite a long intro.
Yes.
Okay, so Christabel, just from the get-go, what are we missing? What am I missing if I don't invest in a home?
So it's the opportunity that awaits. So if you were to compare, because it's two things, it's either you're renting or you live in your own house.
Yes.
Right? So if you live in your own house, and that's fine. However, majority, and I believe that's like about probably 90% of people living within urban areas
Yes.
are renting.
Yes.
So then what that means is in terms of, if you look at a practical way in terms of getting started, so typically you'd need to have a deposit so that you can put in as down payment. So you're looking at, it could be anywhere from 10 to 20%. Then now thereafter is where now their financing comes in. So what I usually say is, because I believe now at least the culture of saving amongst us Kenyans is getting better and
It's
better.
growing
You guys
definitely.
have talked about like money market.
Yes.
So I believe every other person has a money market account,
Yes.
right? So if you have savings, sufficient enough to cover your deposit, then it means it becomes relatively easier for you to transition. Because if you have a source of income, and when you're talking about a source of income, you could be employed, you could be somebody running your own business, and it doesn't even have to be something that's so formal. Even if you channel your funds through M-Pesa, you're still eligible. So it's literally, whether you're working in the gig economy or within the professional space, you're still eligible. Then once you've been vetted, then now you can transition, you can move into your house, then you start now making that payment on a monthly basis. So to put it into context, if you're living, for example, somewhere like Syokimau, you're paying a 2-bedroom for maybe 45,000. And then when you get to move into that house, now you start paying 50,000. The only difference is, now I usually like to say the bank becomes your landlord. And we'll delve deeper so that you can actually see how the bank is actually a really, really good landlord, as opposed to now if you're renting and then you're paying 45. So this 45 is gone.
Okay.
It's gone completely.
Every month.
Every month gone.
You're draining it somewhere.
Yeah. Then the 50 eventually at some point it'll end. Then now you have the asset.
Okay, but Christabel, is the bank a better landlord than the one I see, than the person I can talk to? Unajua naweza ambia mzee pale ngojea kitu kidogo hii mwezi.
But no, Male, let me tell you about honestly, I think sometimes renting, I'll tell you, like, one of the things that really drains me is like when your landlord is looking for a buyer and on a random Sunday, they just walk in with a prospective buyer and they are just walking into your bedroom and
Nyumba ni yake.
at least least we know once the bank, I think, is now your landlord, I don't think they'll be pulling such stance as long as you're 9.5%
No, but
month-on-month is
Charlene,
not really.
we fear the bank.
Yes.
We fear banks.
Personally, I must tell you, I also fear the bank.
Yeah.
But I think hearing this 9.5 fixed interest, I think in a way that tells you that, this is something worth really looking into.
Yes.
Because last year we saw rates move from 13 to 20-something percent.
24%.
Yes.
It's crazy.
And that took a toll on so many people who had mortgages.
Yeah.
Yes. And I mean, if you're to delve deeper in terms of like how, if you're to compare the bank versus your landlord.
Yeah.
Yes.
So first of all, a bank is an institution. Now, interestingly enough, what does that mean? It means they have certain protocols. Before somebody, you see, if you miss to pay your rent, your landlord can just, depending on who they are, they can just come put a lock right, on your door, and then now the next day you come back in the evening and you don't have can't access your house, right? Yeah. Now, when it comes to, we've talked about the monthly repayments. So let's say, for example, something has happened and you're not in a position to either pay it fully, or maybe you want to make some form of partial payment. You just need to reach out and explain to them, and they're actually very accommodative. So they're and then depending on also on the duration of that. So a couple of options. There's an option of like you could restructure the facility in terms of maybe you've lost your source of income.
Yes.
And now if you're paying that 45, you're no longer able to pay 45, maybe you're able to pay 30. They come back to the table and like, okay, let's see how we can structure this 30 and see how we can work together, right?
Okay.
So, but your landlord will not be like, no, you're not going to pile up. No.
In fact, inafaa iongezeke.
Exactly. You need to move out. Then there's certain also other benefits which we'll talk about at some point. Now, like for example, if you've taken like a life insurance policy in the unfortunate event of death, and it was like a joint application, you're married, it simply means that the bank will now, the insurance now steps in, takes care of that facility, and then now the surviving party is left to now just think about running their household and just continuing with life. So there's so many other benefits.
Okay.
That makes sense, because so now we bring in the insurance element. This is not, it's not based on whether you continue working or not. If you stop working, if a calamity happens, then there's a form of insurance that takes care of that and allows you to allows that facility to be paid off by an insurer.
Yes.
Okay.
It's called a mortgage protector. Last year, I saw a mortgage protector go into effect. Lost a client earlier in the year. He had a good life policy, but over and above that, he also had a mortgage loan.
Okay.
He had a mortgage, but also the facility was insured. So even, after his transition, the young widow who was left behind, she was not hassled. Literally, her bank cleared everything, And now, of course, I think at a time of loss, it's not possible to replace, that loved one. But just to have that peace of mind that, even the people you've left behind, they have a home. So like, as a mother, you're just left behind thinking of, how will I put food on the table and the rest, but you're not worried about rent. And honestly, thinking about it, going back to that discussion on whether maybe the bank is the better landlord or I think you can
those
start.
myths that we are debunking today, and we continue to. It's difficult for people to see an institution as their landlord and all, and the knowledge that is lacking also in the market on how to access such things. And so I'm glad we're here to demystify all that.
But Christabel, are you saying that anyone can actually either walk into RentScore or reach out to RentScore and you'll be able, like, what is the vetting process like? What
there's a catch. There's a catch.
Yeah. We need to know, like, because why isn't this like out there in the public? Because I haven't heard a lot of noise being made around this. And this is so fantastic, because if you think about it, would you estimate for us, if I'm taking, say, a 10.5 million mortgage, what would that afford me? Maybe I may not even need to max it out. I can imagine I've seen maybe apartments in the market for 4 million, 4.5.
Yeah.
Like, how much is that? How much would I be repaying, say, month on month, maybe with a 15-year term? Could you give us some numbers?
Yes, for sure. So in terms of getting started,
Yes.
First of all, it's very simple. So we have a tech-enabled platform. So all you have to do is just visit RentScore Africa. So on one end, like I mentioned earlier, we already have the partner financiers that we're working with.
Yes.
Then on the other end, we have a number of reputable developers whom we also work with. Now, we're very selective. We can't just work with everyone because, construction is all over. But then we have to be very careful, simply because you find these developments at various stages.
Yeah.
So some are under construction, then you have a couple which are complete. So if you are buying into a development that's under construction, you want that surety that this is a development that has actually been vetted.
Yes.
And I know even if I get started, at some point it will end because we know how stories go as far as construction is concerned. Many things could go wrong. So we really take our time to ensure we've done that vetting. Now, when you go on the platform, so the first thing that you need to do is there's a section that's just written find a home. So you just key in your income. That's the net income. If you have any other facility that you're paying, then you can also key that in, and it just does the math for you under 1 minute.
What?
Yes.
Like,
So it's very simple.
Yes.
You're able to see now how much you can access and what your monthly repayments would look like.
Okay.
And then the best part is now it filters and matches you with affordable properties within your range. So again, you don't have to look at 100 properties.
Yes.
So if let's say you've been shortlisted and you have like 10 properties, those are the ones that you should focus on. Why? Because sometimes we find a scenario whereby somebody's like, okay, I think I'm ready to, get started. But then they start looking at properties which are far outside their budget. So we've just made that, we want you to just narrow.
You don't want us to dream. You don't want us to dream.
For the first one,
Manage.
yes.
the first one will manage.
Okay.
And the subsequent ones, then yes, you can dream as wide as possible.
Okay.
Yes. So once you've now looked at the shortlisted properties, now to work with an example. So if you look at, you can get like now maybe a 2-bedroom somewhere in Kitengela,
Yes.
which would be going for about 4.8 million. Now with this one, once you've put in a 20% deposit,
Yes.
you're looking at monthly repayments on average of about 40,000 per month. Yes. Then, and we have so many examples because somebody may say, okay, Kitengela is too far.
Yes.
Then another good example is, so there was a 1-bedroom apartment just over here in Lavington that was going for 5.8 million. Now for that one, you just needed to start with a 10% deposit.
Okay.
Wow.
And now your monthly repayments for that would have been about 50,000.
Oh, wow.
And now this is now the beauty about those affordable home loans.
Yes.
If you're living in that house as a tenant, you'd be paying
Almost the
65.
same. Oh, wow. Oh, it's more.
Yes.
It's even more.
Oh, wow.
Can you imagine?
Yes.
So now whatever, that's how I'm saying the bank is a better landlord,
Yeah.
right?
I had that bit of the deposit. So 10%, 20%. What's the cap on that? And speaking of the deposit, other than now the affordable, the 9.5 that has been advanced, to the prospective homeowner.
Yes.
How about this deposit? Is the bank able to, or do you have to raise that?
Okay, that's
Yes.
a good question because as much as, earlier you mentioned that why is it that not so many people are, there's not like a buzz about this. So part of what we do is also market education, just so that we can, educate the market, make them understand how practical, like how they can practically get started.
Yes.
Now, so sometimes you could find a 105% financing, meaning if you qualify for the full 10.5, and that also covers the deposit element of it, then it becomes very easy for you to get started because you don't need to put you don't need to put in a down payment. So that's possible. However, not all of our financial partners will provide 105%.
Yes.
So some will do, some won't.
Yes.
Then the other catch, now here there's a catch. So most developers, they want a sense of commitment from your end. So unless you find a development that's complete, whereby now they already have like what we call sectional titles, then those ones can accept 105% financing because the process from the bank is going to be relatively faster. But if it's still something under construction and then you've seen it, you tell the developer, I'm not going to pay you anything now, and maybe they're finishing in 1 year, and then now you tell them I qualify for 105, to them they feel like you can disappear, or you can, it could be many things.
Yeah.
So they'll still need you to put in at least a 10 or 20%.
Some security of sorts.
Yes.
Okay. Oh, nice. So, Christabel, your story. When did you own a home? At how
I like that. I like that question. So I'm actually, so even as we're doing this as RentScore, it's one of the reasons as to why we founded the company, so that we could solve a problem for ourselves. So I do have a co-founder. And him, in terms of that journey, he's far along. So for me, I'm literally in that process right now. Whereby... Yes. So it's just the same process. You put in a deposit, then you wait until the development is complete. So this one will be completed around either December or the Q1 of next year.
Nice.
Yeah, then I get to get my keys.
So 2026, you share the story.
Yes.
So what was your perception though,
Yeah.
while in school and coming into the career, your career path? What was your perception, and how has that changed about home owning in this country particularly?
Interesting enough, I'm trying to, if I could go back, I grew up in a rented house, and it was social housing. So this means like it's a rent subsidy. So I can say like I'm a direct beneficiary of government initiatives.
Okay.
Why? Because like, frankly speaking, if I compare the rent that my parents were paying compared to what would have been the market rate, literally it was like a 70% discount.
Oh, nice.
Let me put it that way. If you guys are familiar with city council like estates, you'd know like rent is relatively affordable. So this particular initiative, it's almost something similar, only that now this one advances you towards actually ownership. Because that one was access towards like rentals. And then the beauty about it is because again there's a subsidy, it's government owned, so rent is also controlled. So it's not like you wake up 3 years and you just rent went up by 40% or something like that. So at the time I didn't think too much about like owning a home or things like that. It was just just your usual day living and
Okay. So sorry. So how has that changed now? Do you see the need, and especially for the younger Kenyans, is that need there?
Yes. So when we interact with most of our customers, so it's usually twofold. Some you're just living your best life, right? You probably never thought, especially when you're in your, like now from 26, 27, either you're in your second job, so you're not really thinking as much about owning a home. Maybe you're thinking about investments, you're thinking about saving, maybe you're just about to also either get married or start life. So now if you approach that phase, and you start becoming a bit more serious, because you're thinking about, okay, I'm going to have children, I'm going to have a partner and all those things. So then there's the discussion of owning a home. But then it seems something that's far-fetched. So it's like, for now we can just look for a nice neighborhood where we can move into. Our kids get to play and at least there are nice schools around. But when it comes to home ownership, not necessarily. Now, until we tell them it's actually possible, then you see the shift in mindset.
Okay.
From your success stories, really, Christabel, tell me, what is the youngest, like, what would you say, like the youngest maybe client whom you've had, at RentScore? What is that age bracket that maybe even took you back and said, wow, they're actually moving from renting to home ownership?
So this one is sort of like an outlier. So it's a young lady. She was 26 then. And she had just now moved to her second job, but was still living at home. So what happened is the parents told her, before you actually move out, there's this company called RentScore. Interesting enough, even the parents knew it.
Oh, nice.
Wow.
Yeah, you need to go talk to them, because they can, instead of now moving out and renting, you can now, you're rent unalipa. You can now actually now get to own a home. So when she came, she didn't even know about us. It's the parents. So when she came, we had that conversation. She did the test. And then now we took her to site. She saw like a really nice place, and she got started. So the development was completed in December. And now this year she'll be moving into her own house. So literally she bought somewhere close to work. And that means now from this year she just gets to move in and start renting. So she just continues staying at home.
Oh, wow.
Yeah.
And honestly, That is
Imagine,
something I have noted with the younger Kenyans. Sometimes we tend to think they are the YOLO generation. I think they're more woke than even us millennials.
I agree.
Like
I agree.
for real,
Yeah.
when they see an opportunity, they are willing, they're curious. They do their math, and if it makes sense, they actually take it up.
Yeah. No, I recently attended a money conversation, Charlene,
Yes.
and this facilitator said, if I ask you how much you earn,
Yes.
you'll probably tell me your net salary or your gross salary. But if you're to put it into perspective, how much you really earn is the much that you remain with after paying the people you need to pay. So inaenda kwa wenyewe. This is not your money.
Yes.
You've earned it, but it's really not yours. You have to go take rent. You have to go school fees. You have to go take all these things. So really, the much that you have is what you remain with after doing all. And most of the time, if not all the time,
Yes.
it's negative. So the conversation today means that you can actually put it into your pocket. It becomes yours at the end of the day that you own this house. And I'm seeing that, I'm like, oh yeah, that conversation made a lot of sense. Yeah.
And you talked of joint home ownership. So if I come with my spouse and we get onto the table and we sit with RentScore, is it possible to be advanced like 10.5 million, 10.5 to my spouse, and we get a home worth 21 million?
No. That's the catch.
Yeah.
And if you're looking for a catch,
Or do we need to buy two entirely different units?
remember the primary objective is to help you own that first home, affordably.
Yes.
So if you're doing a joint application, then you're going to be vetted as one. Because sometimes you find maybe one person's income, like the amount that they can access is lower.
Yeah.
So then they supplement it with this other one. Then they can access now up to the 10.5.
Okay.
And also it's one property either per individual or one property per household. So it can be you've identified property X and maybe it's going for 20 million and then you get 10, he gets 10, and then you put it together and then no.
Okay.
Yeah, because now that will be making it commercial.
Okay.
Yeah, they're not meant for commercial purposes.
Okay. Can the ownership be joint? If we are settling on the 10 million house, can the ownership be joint?
Yes, absolutely. Yes.
Okay.
Yes.
And the legal papers are drawn up to that effect.
Yes. Because it will get to a point where now when you delve into the legal side of it, there's things like now spousal consent. Because property, it's a big asset, it's a big deal.
Yes.
If you say, for example, you're single, you have to say, like actually say that I am single.
Yeah.
Yes.
Yeah. So obviously
Oh,
you can't.
really?
Yes. So there's a whole process.
Yes.
Okay.
You can't do that. Like you can't be married and then say you're single. I don't know. Yeah.
Okay.
Yeah.
So does RentScore deal with the legalese of home ownership? Because I know the legal aspect of it has a lot of costs as well.
Yes.
Does that come together with the package?
We don't deal with the legal side of it. So what our platform does, it now reduces that process of house hunting from months to minutes. And then now once you've identified something, then we take you to site, you see it, then you start the paperwork. So now where we come in addition to now, of course, having just made the process very efficient, is now we can negotiate for you in terms of like your deposit. We'd also be able to sit down and sort of like do a needs analysis and understand what would be best for you. And if you're now looking for like support services, so be it like, for example, legal, we do have like a panel of conveyancing lawyers that we work with, so whom we can always refer and recommend.
How much of a percentage would you attribute to the legal cost? Because so we've put a deposit of 10%.
Yes.
How much more do I need to start the process?
If you're purchasing through now the affordable home loans, you're going to pay the advocate of the developer. So that may be anywhere from 1% to 2%. It varies.
Okay.
Most of the properties that we have, they would charge you 1% of the sale price of the property. You also need your own representation because remember, that's the advocate for the developer.
Yeah.
Yes.
So they're representing the interests and facilitating the paperwork on behalf of the developer.
Okay.
Yes.
So for you on your end, you also need representation just to help you with the due diligence, ascertain that everything is okay. Also, an advocate will charge you 1%. They do have a scale of fees that they work with. I believe the minimum amount, if they are not to use a scale, would be about 35,000. But then over and above that, so it may be like a 1%.
Okay.
Then if now at the point where before the funds are drawn down, there's that charging process, because remember that now the property is going to be used as collateral to secure the facility. So there's also going to be the advocate from the bank side. So again, you're looking at 1.5 2%. Yeah. So if you're looking at the closing cost for this entire process,
Yes.
that will be about 11.2% of the sale price. However, that amount is staggered across during the transaction period. There's some which will come in earlier, there's some which will come in later. Now things like stamp duty, valuation fees, all that.
Yes.
But on average, if you're budgeting, just work with it, like 11.2%.
Okay.
Yeah.
For someone with a trust, is it possible to buy the home in the name of a trust? Is that possible?
Well, frankly speaking, we haven't dealt with such a scenario. So my assumption would be, of course, in terms of the person securing the facility, it has to be an individual. So for example, it can't be like a company or a legal entity
Yes.
securing the facility.
Okay.
Yeah, it has to be an individual.
Okay, so
Yeah,
individual. Okay.
yeah.
Okay.
Even if you're an entrepreneur,
Yes.
so let's say if you're like a sole proprietor, in terms of the vetting process, so you can submit your documents for the company, or if you're like a sole director, if it's a limited company, then they can consider cash flows from the company.
Yes.
But they'll be lending to you as an individual, not the company. Yes.
Okay, so Charlene, if you have a mortgage,
Yes.
you've taken up the mortgage, will that amount of money be taxed as you...
Yeah, it's not tax exempt.
Actually, I was about to go back to the point of like why the landlord is a better landlord.
Yes, tell us.
So there is actually a mortgage relief. Yes, of
Up
up,
to
to
what?
25,000 per month.
Oh, nice.
No way.
Yes.
So not only do you
Yes.
pay towards owning a home, but you also have a tax exempt element on 25,000.
Yes.
How do you
Wow.
qualify? Is it the what determines 25, 20?
So Kenya Revenue Authority has sort of like a graduated. You see, even when you pay payee,
Yeah.
Yes.
it's not one for everyone.
Yes,
They are sort of like bands.
Okay.
So the maximum limit in terms of the tax relief that you can get is 25,000. So of course it will depend on your income and also how much of the facility have you accessed, etc.
Yes.
But even if it's a smaller amount, like even if it's 3 million, 4 million, you'll still get some form of relief.
Oh, nice.
Wow.
The maximum now is just capped at 25,000.
Okay.
Yes.
So that means even for, say, self-employed people, when you're filing your returns, you can actually claim then
Yes.
Mali.
I think
Yeah, I know, right?
I think we're doing
Like
a
what-
good job. So last time we talked about retirement.
Yes.
If you
Wow.
save for retirement,
Yes.
tax exempt. If you
Yes.
save for a house, tax exempt.
Yes.
You purchase medical insurance, you're sorted.
Yes.
What else do you need?
Oof. And finally, you get to show us that there's actually a simple path to home ownership in this country.
Yeah.
Yes.
You know? So tell us, Christabel, you know, for the benefit of our audience.
Yes.
How can we find you? Because I know this weekend
Yeah.
I will be on your website all weekend long.
Yes.
Because I loved what you said. You reduced the home search, like the window shopping, if
To
you may call
minutes.
it that,
Yes.
from probably months to minutes.
Yes.
I mean, that's fantastic. You're doing a fantastic job as
Thank
RentScore.
you. Yeah.
Tell us, how can we find you, you know? And if you actually want to reach out to you, you know, is there like a number or is there an office that people can walk into?
Yes. So in terms of getting started, it's very simple.
Yes.
So visit RentScore.Africa. You'll interact now with the platform. So we have an affordability calculator. So let's say find a home.
Yes.
Yeah. Then key in your net income. The calculator will derive facility long term and then also show you how much you'll be paying on a monthly basis. And the beauty about it is, so sometimes we've seen people thinking, 25 years is a long time. So we've made it flexible. You decide if you want 5 years, if you want 10 years, 15,
Yeah.
there's a toggle bar. So you get to play around with it and you see how it moves.
Yeah.
Then, of course, you'll be able to also see the monthly repayments, and then you'll be match-maked with now properties within your affordability range. Then thereafter, you can now reach out to us via either WhatsApp. We are also on Instagram. We're also on LinkedIn.
Ish.
So, yeah, in terms of our contact, so that's 0743 466 209. Or if you want to send an email, that's also info@rentscore.Africa.
I forgot to ask this. Geographical in terms, like within Kenya, are you only covering Nairobi? Or if I want, say, a property in Kisumu, you know, somewhere in Mombasa, are you able to cover countrywide?
Well, that's the objective.
Yes.
So for now, we are in Nairobi and then also the satellite towns around Nairobi. So if you're looking at Ruiru, Juja, Syokimau, Rongai, those satellite towns.
Yes.
But soon enough, because again, we've received so many requests from customers, Nakuru,
Yes.
Mombasa,
Yes.
Eldoret.
Yes.
Yes, so we'll be expanding to those towns and cities very soon.
There you have it. So
Yes.
tukitoka hapa
Yes.
tunaenda kulipa rent kwa bank.
Yes.
We
Yes.
are becoming homeowners very quickly. I think I've learned so much personally.
Yes.
The possibilities are limitless and endless, and I think making it easier and demystifying the conversation of banks and not having to read this whole script
Yes.
for me to own a home.
Yes.
So thank you so much, Christabel, for this session.
Yeah. Thank you for having me.
Yes, and I'm also very happy because I must tell you, on my vision board this year, one of the, my dreams for the year is actually to also be a homeowner.
Wow.
So, and I think I had mentioned this to Christabel a little bit earlier.
Yeah.
So hopefully,
Yes.
this weekend I'll spend a lot of time on, looking at some of the options, and hopefully we can work together. Fantastic work you're doing.
Yes.
And part of our vision board as TBT podcast was to remind Kenyans and help Kenyans about this home conversation
Yes.
and how it ties into insurance. And I think we've done that justice.
Yes.
Charlene. That has been our episode today. Thank you for joining us. Please remember to subscribe. I've been your host, Malim Toto Mwanza.
And I'm Charlene Kimara. You may call me Mama Bima Kenya.
And until next time, stay
Stay
insured.
insured.